So I am Sean Houghton. I'm the faculty director of the Daniel M. DeLella Center for Real Estate, and this is our, I think, 7th one of these, which is amazing. So we're growing. Just like every year, we're going to have a panel of some of our recent grads, 2012, 13, and 14, and then we're going to have a keynote speaker in the second part. In the last part, we're going to go to the back and hopefully network with the professionals who are here, if the students will get out of the back row of these seats and go talk to everybody. And there'll be some food afterwards. So I just want to thank a few people before we get started. Jim Vesey's not here. I always thank him at the start of this because this could easily be called the Jim Vesey Career Conference. It's been his baby since the start. So he's registered. He might show up later. So he's been a big part of this. My business fellows in the back, Tony Zaccardi, and our newest full-time former business fellow and now full-time faculty member, Charlie Davidson, and they both are very helpful in everything we do. Angela Lane has been taking Jessica's place for much of this and organizing everything along with a million other things. We wouldn't get this done without Angela, so thank you, Angela. All the professionals that are here, thank you very much for coming. My panel, my esteemed panel up here, and of course our keynote speaker tonight. Really looking forward to that too. So hopefully we're gonna have a fun night. This panel will probably go till 6-ish, I think. We're gonna go through a few questions. I'm gonna ask these guys to say kind of what they do in their different jobs. We have a lot of areas of the industry representative, a private owner, a public owner, investment sales. I think Carl does a little bit of everything at this point, and a commercial banker. So we have a lot of aspects of the industry. The cool thing about what we're doing is we could have had another full panel. The last couple of years, it was hard to get a panel. We've had 2.1 classes of co-majors in the last 3 years. So it's really been the fruition of our efforts is hopefully training these students. And Carl was actually I think co-major, right? You're the last year before co-major. Carl just was a finance major and used his networking ability to end up in a really great office in Philadelphia. So we're happy with where we're going. I think we have even a bigger crew in the audience of graduates from the last few years, so we're getting a nice set of students, and we have some students that are looking for jobs in real estate. Those of you that are employers, our students are in great demand. I was just talking to my class today. I've never seen it better. So if you're looking to hire VSB students, which our real estate co-majors are, you're not alone. So if you walk through our building, the number of incredible companies that are there to hire our students is hard to believe. So they're in demand. So step up, make them some great offers. There's a reason everybody likes them, and have fun talking to them tonight. So with that, I'm going to introduce my panel, and then I'm going to ask each of them to kind of give you a 2-minute version of what their job is like, and then I'm going to ask some questions which I made up weeks and weeks ago. So I've thought about this a lot. So from my left to my right, I just asked him. Carl Fiebeg is from 2012, isn't that right? Finance major, not a real estate minor. He was in one of my classes, and one of my other old students that he works with came in and hired him at Marcus & Millichap, and they just moved to HFF and are killing it in the Philadelphia market, if you're paying attention. So they're doing it, and he's really tired, so they're doing a great job. Next is Paul Mascola, who started out in another place and is now with Tony Zaccardi at Brandywine Realty Trust. He's in the development side, so he's lucky that Tony let him out today to come over here. Pete Nacarado and Paul's from 2013. Pete Nacarado, and you're a co-major, right, Paul? I think co-major, yeah, you were a co-major. Pete Nacarado was a co-major from 2014, and he's working with Equus, which is Dan DeLella's company. So he's on the private side versus the public side, and Shannon Bono's from 2013 as well, and she's out in Pittsburgh with PNC going through a commercial, I guess, training, a development program. Yeah, so she's on the banking side. So we should get a lot of insights of different things that people do. So first of all, just thank you all, first of all. And first, we'll just start on our left. And could you guys just give us kind of a summary of what your role is in your current firm, and then I'll ask you guys a few questions. And I think those are working, I guess.
Okay.
They are.
Hi, everybody. I'm Carl Fiebig. I'm with HFF, and we are a capital markets intermediary focused on investment, sales, debt, and equity. I am focused on the investment sales side. And like Sean had said, we started at Marcus & Millichap. Our team was offered the opportunity to open up the HFF Philadelphia office. So at Marcus, I was essentially thrown into the fire of the brokerage world. I started focusing on northeastern Maryland down to Baltimore. I was able to cut my teeth on a couple deals down there before we went over to HFF. At HFF, I really helped stabilize our operations. So I was doing everything from pitching clients to getting books and records to underwriting to putting together offering materials to getting on the phone and pitching deals, running due diligence all the way to close. So I've held various responsibilities at HFF since I've been there, which has been great, which has also been a little bit daunting of a task as well. It's long hours. We are, like Sean said, we'd like to think that we're doing well in the market right now, and certainly with where Philadelphia is, we're trying to make some headway and put our stake in the ground and let everybody know that we're here to stay for a long time. So that's a little bit of what I do at HFF.
Thanks. Paul?
Thank you, Carl. I'm Paul Mascola. I'm originally from the DC area, but Villanova brought me up here and graduated in May of 2013, went back to DC and did REIT lending from the commercial banking standpoint. So underwriting commercial lines of credit and various types of construction draws. And then about 6 months into that, came back up here to work for Brandywine for a professor of you guys, Tony Zaccardi, if you've had him. And it's been about 8 months now and do everything from managing budgets to our architects to our engineers and kind of just overseeing projects. And it's an exciting time for Brandywine. We are getting into the multifamily game and we're traditionally a kind of Class A trophy office space company. So it's really neat to be seeing some of that.
Hey everyone, I'm Pete Nacarado. As Sean mentioned, graduated class of 2014. Work at Equus Capital Partners, located here in Center City, Philadelphia. We're a national, developer, owner, operator. We're currently investing out of our 9th fund, so I came in kind of in the middle of that process. Started working after graduation. Started in about June of this year. So obviously, just the longest career out of everyone here, about a good 3 months. In terms of what I do, I'm focused on, I'm on the multifamily side right now, so I'm on the acquisitions team focusing on apartment buildings. I work directly under 2 vice presidents, one of which focuses on, the Pennsylvania, Maryland, DC area, and the other focuses more southeastern, so Atlanta, Tampa, Florida, all that kind of stuff. So basically, I'm kind of the support service for everyone on the team, whether, depending on where we are in the deal cycle. So like right now, we're pretty close on 2, so we're very much in the due diligence kind of phase of the project. I'll do everything, starting from the beginning of a deal, underwriting new deals, talking with brokers, seeing what's out on the market, all the way through to, the closing process and being along for the ride. So, I mean, it's been a great experience so far. I've learned a ton. Obviously, Villanova is a great place to learn in the classroom, but obviously, in my 3 months, I've learned a ton to start. So, glad to be here and looking to talk to you guys about some stuff.
Hi, I'm Shannon Bona. I work for PNC Real Estate. Prior to joining PNC, I was an intern in the Philadelphia office, and then upon graduating, I decided to take a full-time position there, and I'm going through the development program, which gives us a path to become a relationship manager in one of our markets. So right now, I'm going through defined rotations and loan administration, underwriting, market research, and capital markets. And upon graduating, we'll be placed with a highly developed relationship manager as an associate RM, and we will begin to build our portfolio. So basically, banking is pretty much the business of managing risks. So we have developers anywhere from high net worth individuals to billion-dollar REITs come to us. We look at their whatever it is from. It could be an acquisition, a complete repositioning of an asset, or construction. We decide if it fits our risk portfolio, and then we go ahead and give them a financing package. And we try to cross-sell various opportunities. We have a pretty big capital markets group. And so that's pretty much what I'm doing. And it is what you make it. So each rotation, I try to learn something new. Right now, I'm in underwriting, so that's the bulk of the work, making sure the properties and the projects will have enough cash flow to pay their debt service. So it's been a great experience. We've been working on all different asset types, all the way from senior housing to the 4 main food groups, and I've even gotten some experience with tax credit, which is an animal of its own. So, all right.
Thank you, Shannon. So I'm going to give a little pitch as I ask these questions. I gave these guys some questions. I'll pick one out to ask each one, but just a little bit about what we do in the classroom. This first question is going to be a classroom question. We're very applied in what we do. Most of you that are in classes know, but you've heard Tony Zaccardi teaches our development class. He's developing assets in this market. He has for a long time. So very applied. Charlie is our new investments/modeling person. He's been teaching modeling to MBAs for a long time. He spent a career on the investment side of the business. We have several partners from KPMG in the audience who teach our accounting for real estate investments class, so you learn from actual professionals there. And we have a lawyer, Burke Ward, teaches our business law class. So I think I'm the only one who doesn't practice, and I teach real estate capital markets, so that's somewhere I actually know about. So we try to be very applied. So one of my questions, and I think I'm going to pick on Paul since he's a co-major, is how did the classroom prepare you for, especially working for the person that you actually had one of the classes from? That should be interesting. So how did the classroom prepare you for your job, Paul?
Well, just like anything else in the classroom, I was like any other student. You're studying for the test, you take the test, and then you're kind of moving on to the next thing. It's what you have to do to graduate. But things do come back around. Like as Shannon said, debt service ratios. I remember doing that in banking. I mean, it's something you'll see junior year, and then you won't see it until you're thrown into it. But it's just an application thing. I mean, it's just being able to take. It's tough. Just being in development now, I don't do any like stock or bond valuations or anything like that, but I can translate a lot of the finance stuff over. So it was good. It was good.
I told him to be nice, so that was. How about you, Pete? I'll ask you the same question since you're working in I guess similar, but different a little bit.
Yeah, I would say for me, at least in my position thus far, I thought it was extremely helpful. I'm in Excel modeling at some point, whether it's a deal that we are currently working on or looking to buy or anything like that. I'm modeling every day. In terms of kind of the other just topics, the legal stuff you're talking about, just the concepts you cover in class, I think I touch upon all the time. So I think I was definitely in a great spot coming from this school and going into a position where there's a lot of times where somebody will ask, "Are you familiar with something?" And I might not know everything in the book about a certain legal topic, but even to have like the baseline knowledge, I think definitely helps you stand apart from some other kids coming out of college that don't have some of the same classes we have.
That's good. Go ahead, Shannon. You can answer this one too.
All right. Well, I think it goes beyond to just knowing the numbers, because anyone can do that. You can learn that on the job, but I really think the case studies that we learn at Villanova help prepare us for the real world, because at your job, whether you're in investments or you're in banking, you're going to make packages and you're going to be delivering them to your client, whoever that may be. It could be an exec, it could be an actual client out in the development world. And I think through the classes in real estate investments, you have these case studies, you have these problems, and you build this package and you're delivering it and you're learning how to present it and make it effective and to highlight the information necessary. So for me, it wasn't necessarily what I learned content-wise, but definitely how to present it, how to make a portfolio look nice, and definitely Professor Ziccardi's class helped that out a lot too with our capstone project. So it's the bigger picture as well.
And outside of Carl, everybody up here was on one of, we do 3 cases a year, case competitions, one at Cornell, one we host, one out at USC, and we try to get as many people to participate as possible. And I think Shannon, Pete, and Paul, and Carl wasn't here. We didn't do it yet, I don't think, when Carl was here. So would you think that helped as much as anything going through that?
Yeah, I would say if you have a chance to get involved in any of those, I know they only take 4 to 6 people per thing, so it might kind of be tough to get on board, but it's great. I mean, from financing it to developing it to presenting it to real estate executives in a room, which is probably the most invaluable thing you can get from those experiences. So I kind of just going out to USC was a ton of fun, and it's stuff I still see every day on the development side. So it was good.
Yeah. All right.
So on a little bit different note, I think there's several intangibles that you learn at Villanova that you can't necessarily put on paper that are very effective, at least in my business line here. I think effectively communicating is huge. I think at Villanova they stress working in groups, working in different team environments, learning how to deal with different types of people. That's huge, whether it's on the phone. I mean, I'm in a business of managing relationships. I'm trying to make clients happy, represent clients, get them a good deal at the end of the day. So whether it's through the phone, through text, through email, just depending on what kind of client you're dealing with, learning to adjust to them and being able to effectively communicate is certainly a positive and something that I think helped me here.
Thanks, Carl. Well, I'm going to stick with you then, since you grabbed the mic. So You're the old person up here, I guess. You're 2012. So, what's been your biggest surprise? I guess leaving, these guys are going to be. There's a lot of seniors I see out there. What's the biggest surprise you had from what you thought the workplace was going to be like versus what you've experienced since you've gotten there?
Sure. I just think looking at real estate as a whole and being an alternative investment and something that these funds are only allocating in most cases less than 10% of their business to, just the opportunity within there. I mean, you could be a developer, you could be a broker, you could be working for a REIT, you could be with a PE shop. I mean, there's so many different ways that you could get involved in real estate, and just to think that that's just such a small part of the spectrum it's tough for me to fall asleep in, and I'm like, oh my gosh, there's so many things to learn at the end of the day. But I think that's been the biggest surprise, and then it's just figuring out where you fit. I think that I was looking for a sales position with some sort of financial background, and I think brokerage kind of fits me to a T. It was a little bit by luck, a little bit thanks to Sean and his class. So I think I kind of found my niche, but yeah, I think
so
in
too.
general, I think everybody in this room could find their niche in real estate if they really wanted to. So there's a lot of opportunities out there.
I like that question. So let's see what Paul's got to say. Let's put Tony on the spot. How professional Tony is? Is that the?
Extremely professional. Extremely. Obviously, being able to work for someone who's done it for 42 years, something like that, is pretty amazing. Just as Sean said, the assets that he's put on the market have been pretty impressive. And Brandywine's an office company, and we have a big project in Plymouth now, putting up 398 units, and we're expecting some pretty impressive rents out there. And just to see him working with Toll, who's a residential developer, work with them step by step, just to get the finished product is pretty amazing. And as good as they are residential, I don't believe the project would look like it does or feel like it does without his influence. So that's been a really fun part of my job in recent months.
By the way, the market's hot, if anybody didn't tell them yet for that ground up piece. So.
What about you, Pete? What's been your big 3 months on the job working with
one
Equus?
Thing that has definitely stood out to me thus far, and everyone's probably heard it before, but I finally have a true feeling for it, is how much of a relationship business it is. The company that I work for isn't the only company on the planet that invests in real estate, but we're good at what we do because we have a lot of people that have been working for a long time in the business and have a great track record and great reputation. So it just to see how important it is to answer everyone's emails and to talk to everyone and get your name out there is huge. You could be a 4.0 student and not have any connections, and it's really not going to get you very far. I don't think so. So just what I've learned in these 3 months is just every team for me at least meet their younger person on their team, get to know them, because you never know over the course of your career who's going to get into what kind of positions they'll end up at.
By the way, you don't have to wear a tie all the time in real estate. These two middle guys got dressed up to come here, so that's what Carl always looks like. He always looks that good, so it's just how he walks.
It's the first time I wore a suit since graduation.
What about you, Shannon? What's been surprising to you as you've entered the real world?
Well, there's a lot less golf outings than you would actually anticipate. No, they tricked me with my internship. I was shadowing an RM, and they would take me out sailing with clients. It was great, and now I enter the bank, and we don't do that every day. But no, actually what I learned is the constant need to sell yourself. You're not just selling a product, you're not just selling yourself to clients, but you're selling it to yourself to management as well. And everything you do, you have to excel at. It's not school. You're not going to get an 80% on a test. You have to be 100% right, and you have to have precision. And it is real estate, and it is an art. It's not really a science. But at the same time, you have to make sure whatever you're presenting to clients, to your management, is 100% accurate and good and better than the competitors. So
I like that answer.
A little bit.
We'll stick with you then. So I guess these are all school. I'm a professor, so I have to ask this stuff. So what's the most important skill you wish, if you could go back, so they're there, so they can go back, that you would have worked on while you were in school that would have helped you starting your career?
Well, I think it's realizing that time isn't a commodity, and when you're in school, you should be capitalizing on all the opportunities you have. And Villanova does such a great job networking with individuals all around this area and elsewhere. And I think it would be definitely participating in every case competition you can, participating in every extracurricular event, real estate wise. Don't waste your time with other stuff that isn't really going to help your career, because it's true. With that being said, I do think you guys should be working on like your literary skills, and don't pass up a philosophy class or an English class, because when you get out into the real world and see some of the product people are giving you, that is absolutely atrocious. You want to make sure that your communication skills, I think Carl mentioned it, but they have to be on point. You have to be able to write. You can't be giving this grammatically incorrect from Mars like piece, because you do see some of that and it's really actually appalling. So yeah, that's my advice.
What about you, Pete?
We kind of talked about it before we came here. You know, I did it, 3 months ago, so I'm not going to lecture anyone, but, just network as much as you can.
I think you lecture people right away. That's like the day after you graduate, you can start lecturing people. It's fine.
I've been through a lot. You guys don't know. But no, but seriously, but just between the real estate class you have, it feels like, every other week, one of your real estate classes, someone's going to have someone come in and speak. Those people are taking time out of their busy schedule to come just talk to you. And you can learn, tons of stuff online and look stuff up. But, one, just getting into the habit of just talking to strangers is a good thing to know, because throughout your entire career, you're just going to be calling people on the phone, meeting people at conferences, all that kind of stuff. So you might as well just get started as early as possible. Everyone's obviously a social person here, and I'm sure everyone goes out on the weekends and stuff like that. So it's just kind of, taking that skill and just bringing it to your more professional life.
So you would have gone to the bars more frequently. That would have been...
I think that would have helped.
Okay, that's good. That's good advice. I like that. What about you, Paul?
I'm going to be boring and jump on the bandwagon. Yeah, you definitely have to talk to people. The dreaded W word, Wharton, obviously. The amazing amount of Villanova product in the market is amazing. I've met more guys in high places from Villanova than I realized. And not being from this area, not being from DC and not being from Philly, I didn't really realize just the impact that Villanova has. You just, at this panel alone and other places, there's dozens of companies that have Villanova guys around. So I would just say try to stay close to Sean and Angela and everybody involved in the center in terms of getting in touch with people like that.
You can hear them whispering up here. These guys are all, Shannon's out in Pittsburgh, but everybody's talking deals up here, which is kind of cool to me, but it happens fast, so it's good advice.
Yeah. Just real quick. I just called Carl like 2 days ago. We just met over the phone. So it does.
Are you going to tell us the deal? Or are we going to get like deal? Oh, okay.
In a couple months. But to his point, the network's real, and these relationships are out there in the workplace for sure.
Currently, for everybody, by the way, we're in the market looking for analysts as well as interns, so feel free to talk to me later. But I can't stress enough how important financial modeling is. I think Villanova does a great job with the Argus program. We have interviewed some Villanova people recently that have set themselves apart. Greg Beester, who's in the crowd, is a Villanova alum, and he was certainly taught well here. There's so many different ways to get to a value, to an endpoint, wherever you need, to a return, depending on which side of the business you're on that you're looking at. And it's really the financial engineering that separates everybody. And it's important for me to understand how different groups are looking at deals and where I could push them, where I can't, because at the end of the day, like they said, it's more of an art than a science. So I think financial modeling and engineering is certainly very important, and you might be just figuring out how to get an A on the test or whatnot, but really understanding what you're doing and your inputs and what's coming out of it is certainly important.
I'm paying them a lot to say that stuff for my students. It's drinks at Kelly's. That's the general pay for my class. I think we're going to get a similar answer, but what's the best single piece of advice you guys have gotten, either while you were here or since you've left here in your chosen part of the field? I gave you like 3 hours to think about this, so you probably...
I'll start it. Kind of just reiterating what everybody said. It is never too early to meet people. So I kind of have an interesting story behind that. So I had interned for B of A. I thought I wanted to go to New York. I thought I wanted to be in banking. They offered me a position down in Florida. I didn't necessarily want to go there. So I'm sitting in Sean's class, and a guy by the name of Mark Thompson walks in, and I didn't know much about brokerage. I didn't know much about real estate. I didn't know much of anything. It was just kind of being in the right place at the right time. I knew I liked Mark. I knew he had a bright future ahead of him, and I wanted to be a part of whatever it was that he was a part of. That led me to Marcus and now to HFF, and the rest is kind of history. I'm very thankful for the opportunity I was given, but I reached out to Mark following that class that he had spoken. We had evaluated a 30-unit deal in Doylestown that Mark had just sold. We got together, we had drinks at Kelly's, and one thing led to another, and that led to a job. So you never know where it's going to come from. The places that it looks like there isn't an opportunity, there is one, and especially in my business, it's tough to say, but brokerage is kind of like a commodity in this world. I mean, somebody's got to trade for the funds that are on a certain hold period. They're going to pick who they like to do business with. Everybody could kind of do the same thing. Some are better at it than others, which HFF's good at a lot of things. But so be personable, do things, learn how to relate to people. Just look for something that separates yourself from the rest of the pack, and there's going to be opportunity.
As a funny, I thanked Jim Vesey earlier. He walked in. I said this should be named after you because this is your baby, more or less. So Mark Thompson was my student from when, 2003, 4?
We don't want to say
5,
old.
sometime in there.
Mark just
He's
had
getting
his first
old.
baby.
So Mark started in the business. We didn't have real estate. We really didn't have much to do with it. But oddly enough, one of his heroes in the Philadelphia market, he has told me this, I don't know if Jim knows this, is Jim. And he read an article about Jim, and Jim talked about how being an owner was a way to build wealth. And he's kind of tried to pattern a lot of the things he's done after Jim's career. So oddly enough, and Jim was our first business, well, I think Jim and Charlie are kind of cohorts, MBA undergrads. So Jim's been a part of the center since then, and he's influenced a ton of the people that are in the room and up here. So it is a small world. So when you get a chance to meet some of the people that have, especially Villanovans, but even non-Villanovans, Tony's a St. Joe's Hawk, Jessica's a St. Joe's Hawk, and they're helpful. Charlie's not a Villanovan, but the Villanovans will happily help you, just like Mark didn't have to sit down with Carl. Seems like drinks at Kelly's is a common theme through all this, but you don't have to go to Kelly's if you don't like it. You can just meet over coffee or something as well. So I like that story because it's interesting how it circles around to a lot of other things that have happened.
Yeah, just one more note too. When I sat down my first day at B of A, I was handed a list of Villanova alum. There was, I think, 150 plus people at B of A at the time that were actually in New York. So I was a little scared. I mean, it's not easy. Anything worth it isn't easy, as like they always say. But reach out to those people. They're more than happy to sit down. Your connections, Villanova, start there. Who knows where it leads? It will probably lead into something good. And if they can't help you, they'll probably lead you in the right direction. So.
There's never been a better time for you students. I told my classes today to be a Villanova Business School student. There just hasn't been. There's never been more opportunities, not just in real estate, but across the board. So, of course, real estate's the best part of it, but it's a great time. You should meet as many of these people as you can that are coming in. What about you, Paul? Best piece of advice?
I guess aside from all the networking stuff that everybody's been saying, really do pay attention to those classes. I remember Professor Vesey throwing a cap rate on the board. I mean, like first day of class. And then I remember he had a rule that your final presentation, no matter what you got, if the class liked it, you got an A. And that's a huge thing. I mean, as developers, when we're trying to pitch, like, hey, don't pick Brandywine, don't pick Keystone, don't pick Dranoff, don't pick someone else. That's a huge thing to have the kind of be the fan favorite in a huge way, as well as.
Did you win? We'll ask Jim later.
No, I actually
didn't
did
win.
I think I sat in the back, and he probably.
Yeah, I think Jim's sitting back there thinking, how did that dude end up there? Other than make sure you make your 6 a.m. flight at LAX, from me, what's the best advice that you have ever gotten?
You did make.
Yeah, I know.
I would say, 1, just stay in school for as long as possible and never graduate. 2,
I took that one.
I would say just be passionate about it. If this is an industry and a field that you truly think that you want to be in, take it seriously. I know, not to throw any other professions kind of under the bus, but there's a lot of kids out there that, want to go to New York, want to work on Wall Street. They'll download, the recruiting manuals or whatever and memorize brain teasers all day. And, that might get people into certain jobs, and they'll probably excel and have great careers, and that's great for them. This isn't an industry where you can kind of just fake your way through an interview. One great piece of advice that I got was actually, I went through my first round of interviews at Equus, and I just talked through your investment project on what I did, and it was a value add project, which, obviously, which is exactly what the firm does. And one piece of advice was bring that next time. Show us what you worked on. Show us your projects. And when you can speak through something that you worked on that's your own, and they can see your passion about it, that's a good interview. That's a good way to make yourself stand out. Not to say if you don't absolutely love real estate today, you shouldn't go into it. But if this is a field you want to go into, I think this, you should really go for it and really love it. And that's kind of what I have to say, I guess.
Thanks. And the good news is I learned what value add is since that project, so I'm kind of happy about them, fired up. What about you, Shannon? What's the best advice?
Well, you said either college or professional life, but I'm going to go back to high school. I remember one of my buddies, he got a perfect score on the AP history exam, which is unheard of. And I asked him, how did you do that? There's so many facts. What about it made you even get the score? He was an excellent student. He was smart. So he says to me, he looks at it like a story. He gets very involved in it. He enjoys it. And that kind of stuck with me, that small conversation with him, because you have to actually enjoy what you're doing. It's not just about the cash flow. Well, it's always about the cash flow. But at the same time, you have to go to work each day, really love it, because you will be successful then, and you'll put more of yourself in what you're doing, and you'll be able to produce great results. So as long as you actually enjoy what you're doing, you don't mind putting in the long hours. I mean, I come from the bank, so it's all about the long hours as well. But it really makes you involved in what you're doing, and it becomes more than just a job and a task at hand.
I think everybody up here, you're going to have to work. I know you hear stuff from everybody. This is a fun industry, and the people are fun. There's nobody not working, really. I mean, that's just, you have to work. If you want to be successful, you have to work. So that part you're not going to miss out on. But I don't ever see any of them beat. They might be tired, but they're excited. All four, and I haven't been in as close as contact with Shannon, so she's in Pittsburgh, but I see the rest of these guys quite a bit actually, and they're always excited about what they're doing. So they're working a lot, I would suspect. Still very tired. Yeah, well, you have to get up early in the morning, I know.
And you have to make sure you're just enjoying it. It becomes your life, so why not?
And I did like Pete's point about the brain teasers, and I'm a finance professor, so investment banking's a great career, but it's funny that he said that. We were in New York City last week on a trip and visited Clarion Partners, went on a tour of a Blackstone hotel, went to Pearson Partners, and then Ken Brown took us on a site. And I think I heard twice during the day when we had a group of 11 students that you won't ever get one of those stupid brain teaser questions when we interview you. We don't really care how many ping pong balls fit in this room. So that's interesting that Pete said that. That's just, so you better know your market if you're going to be in real estate. Real estate people aren't going to ask you something like that, but they will ask you about, what apartments are trading at in Conshohocken for sure. So you might want to know that when you go through time. I am right on when I'm supposed. Hopefully I'm going to get questions. The plan was, so I think we should open it up and let you guys.
One more thing, I know only some.
This is the same kind of control I have in a classroom, by the way. It's exactly like this.
I know only some classes covered, but zoning is everything in real estate. From a developer, you need to. I don't know if they cover it in any classes these days. I actually have no idea, but it from township meetings to reading the thick township zoning books. I mean, if it's not allowed, you can't build it, and it always takes a little personal touch there, so it's all about zoning. I
saw some students working on zoning last week for, I do believe, Professor Zaccardi's class. So, he might, I don't know. Maybe a little zoning goes on in that class. So let's open it up. Actually, anybody can ask a question, but I would love if some of our students might step up and ask. They're not going to bite. They all just graduated, so they're in the same places you were, the same fraternities, the same, whatever you do, the same study places. Fire away. I should have planted questions. I should make Sean get up and act like he's a student and ask a question. So, Tank's not asking a question. Somebody's got to have a question. Yes, please.
So if you know that you want to go into real estate, would you recommend just getting into real estate any way you can, or trying to find your niche earlier on, how some of you kind of did, or what would you recommend?
It's a great question.
Well, I can answer that. I got into the debt side because I really wanted to understand.
Lanier, can you repeat the question?
She asked if you want to get into that's a good point. If you want to get into real estate, should you try to get in any way you can and then move around afterwards and find your niche, or should you look for a particular part of the industry and try to make sure you enter there? That was the question, which I think is actually an excellent question.
Well, I mean, I had some strategy behind it. I decided to get into the debt side because I thought it was a great way to really analyze certain properties, because, I mean, all we care about is that we're getting paid back. So we're going to look at every single type of risk. We're going to find out what the mitigants are, what are actually good mitigants, what aren't. And I figured that would be a great resource to learning about the assets that I may one day be wanting to sell on the investment side. So that was a personal move on myself, but at the same time, there's so many opportunities. You're going to get into your career. In 2 years, you might want to switch. And I mean, Villanova provides the background that we could do that. We have the capacity and we have the demand that we could switch. So there's strategy, but also take what you can get a little bit.
I think you get it any way you can. Sorry, Pete. Yeah, you definitely should. Best GM in baseball for you guys out there is Theo Epstein. He was an intern at the Red Sox when he was 18. Now he's the best GM in baseball. So you got to get it any way you can, really. And there's so many different, as Carl was saying, sectors of real estate. So if you're you're on the investment side, you can jump around to certain other things, and you might leave one company and go to another, but it's still a learning experience. And yeah, I think my advice is to get in any way you can if you really, if it's something you really want.
I guess I'll just take that.
You just work for you, right, Carl? Just go.
You could if you. We work together. We're a team at HFF.
But work with you. Sorry.
Also, I would suggest getting somewhere where you're going to take a look at different product types. Getting into an analyst position where you're going to be evaluating retail. You're going to be from there single tenant to shopping centers to multi to everything. I mean, in our office, we even have a self-storage broker. So get somewhere where you're exposed to a lot, because then I think you could find what interests you. I mean, different drivers for different types of product. I think that will lead you in the right direction, because when you're really entrenched in a deal is when you could kind of find yourself a little bit.
My answer to that would be similar, but you should have an idea what the different areas of the industry look like. So you have an idea in your head where you think you're fit. That doesn't mean you'll end up fitting there. And whoever you're talking to, that should be the love of your life. So if you want to be, we're placing people now. Pete's in a PE firm. Undergrads don't really do that often, but there's another one in the crowd who just went to a PE shop. So we have, I think, 7 students working at PE shops from the last 2 classes, which is pretty good. Paul's working for a developer early in his career. Those aren't the normal pathways, so there are those opportunities. You better have some good grades if you want to get one of those types of positions. But banking, brokerage, those are all great areas to learn the industry, and you can go from there to somewhere else. So if you want real estate, take what you can get. I would say be patient. Real estate people are more just in time than the rest of the world, so the jobs will come around like next March, unfortunately. So if you really want it, work with us, and we'll try to find exactly what you want. But you can definitely move around within the industry from what I've seen. Another question? We have time for a couple more. You don't get this shot all the time.
Well,
Brian, perfect.
How common is it after 2 or 3 years of being an analyst to go back to get an MBA as in real estate?
Does anybody know?
I have no idea.
Just being at Brandywine is one of the larger firms around, so I guess I have decent exposure to upper-level guys, and the majority of them don't. But these days, it's kind of like it seems to be becoming a requirement. However, I would recommend a few years in between, but that's just my opinion. Anyone you ask about an MBA is going to say something different, so you kind of have to ask as many people as you can.
No answer, Carl. I think it depends, Brian. Where if you want a bulge bracket bank real estate related job in New York City, then a full-time MBA program after some time is probably the path that you would have to go down to get that. Or if you wanted to work, for one of the really big New York firms, if you wanted to work for Clarion Partners, I think everybody there has an MBA. So it depends on where you want to be. I think if you want to work on the broker's side, I don't think an MBA is required. I'm not even sure it would be worth your time, but so it depends on your path. I would think, and I think you'll find that out once you start down. I mean, Blackstone, definitely, everybody in there has an MBA at some point. So it's such a broad industry. It depends on what part of it you want to pick to be in, but it's semi-common, I would say. I guess that's my response. Which one? Oh, it's Connor. I got twins down here, so Connor, yes.
What was the big driving force for you guys to get into real estate in any asset, really?
Thank you. Good question.
For me, it's in my family. So my kind of elevator speech is I don't know if I'm the third or fourth generation from my family come from Italy, and the first generation that was there, when they look back on where they came from, where they are now, who were the really influential people in the town, and they owned property. So that's kind of just where it started. I'm from the Northeast, so in Philadelphia. So at one point in time, my great grandfather owned 25 houses, and that's what he rented out. So and it kind of started from there, and everyone kind of got into a different niche. My family's structural engineer, so they build buildings. So my entire life I've heard about different deals they've been on, the projects and whatnot, and it's always been there in the back of my mind. And then it was one of those things where I come to Villanova, sit in on a class, and it's one of those things where it all comes together. Obviously you have some classes that you take here you don't necessarily love, but you go and you work hard. And taking, I think investments was my first class, and just talking freely in class about different concepts that we're covering. And when it didn't feel like school anymore, and it felt like just something that I wanted to talk about, all the time, that was kind of the moment where I was like, it fits in more than one way for me.
What about you, Shannon? I think you're different.
Well, a little bit the same. My family comes from brokerage as well. My dad was a stockbroker. My mom was on the residential side. So when I was going through Villanova, they made me get my real estate license as a fallback. Turns out the real estate program was actually kicking off, and I was very interested in some of the classes, and I ended up taking them and falling in love, because as a business student, you can go into many avenues, but real estate has something tangible. You get to see a project, you get to see how it's developed, and I found that fascinating, and I really loved what I did, seeing the whole offering memorandum, seeing the package being built, and then selling it. So that was for me, and it's definitely not a fallback. It's my career now, so happy to make that happen.
What about you, Paul?
It's definitely the cliche answer, but a tangible sense of accomplishment is really a huge, it's really a huge plus. Coming from the underwriting side, the construction guys at any REIT would come to us and say, hey, we need this to build this, and you never really get to see it get built. But now on my end, you're with the architects, with the engineers, you're making sure that the pricing's right, so you can go build it. So it's definitely a tangible thing for me, and I kind of fell into it through Villanova. But yeah, it's a tangible thing for sure.
Carl? I think you already told us, but.
Sure, I'll spin it a little bit. For me, it was getting on the principal side. I think that there's an extreme opportunity to create wealth for yourself, and there's no better way to learn it than being an analyst, being in the business. Brokerage is just a way of learning that, but you could learn it in all different jobs within real estate. So for me, that's kind of my long-term goal at some point. So I figured there's no better place to start than actually in the trenches of various deals and various product types. So
that's kind of cool. We've got groups of students now that are talking about starting their own firms and funds. I think that's our behind-the-scenes dreams of some of these guys. That'll be that. I'm retiring the day one of our groups of students starts a fund. I think I'll be done at that point. So, any more questions? We got time for probably one more question.
What's your least favorite part of the industry?
That's a tough one.
I guess for me, it's people's on the outside's opinion of brokers. We're kind of frowned upon in the business a little bit. People don't take what we say seriously. They think we're trying to oversell things a lot. We understand that to some point, but there are some good people within our industry, and if we weren't as frowned upon, it would make me feel a little bit better at night. But
You're not answering, Paul. Everything's roses and.
No, I mean, every job has, you're not going to enjoy anything a ton. I mean, you're not a professional golfer, You're going to work, you're sitting at a desk, but you can make a lot of things enjoyable. I would just say township meetings from a developing perspective are very frustrating, because you're a company, a $3 billion company coming in there, and someone who is a bus driver during the day, not that there's anything wrong with that, is telling you what you're doing isn't right, or making you feel like you're morally doing something wrong. And I mean, I don't think Tony cares, he just does it, but that's probably something that I want to work on that I don't like, because I don't think I'd be good at it yet. But so there's always things you're not going to like.
What about you, Pete?
I mean,
I like this question.
I'm pretty fresh, so it's all great still. I would say one thing that is something I don't know that we get exposed to, not that we really should, was like full-on legal documents. Had to read one today. It's kind of I don't know, very random answer, but reading through a very long legal document is not fun. But it's one of those things where it's like when you go through school, you had to read, something for ACS that was super long, and you had no interest in doing it. But at the end of the day, it was important. And this is the same thing. I mean, you read, I don't know, purchase and sale agreement. If you mess something up in there, it's going to be a bad day for you in the end. So one of those things you just have to live through. And I had to do it this morning. That's the only reason I thought of that. So
today, that was the worst thing.
Well, I'm going to keep it short. Regulations and human resources. Two things. Worst part about banking.
Okay, I'm going to let these guys go, so thank you. That was great. It's great every year, so thanks for your insights, guys. You all have a present beside you.
Thank you for having us, Sean. We appreciate that.
Oh, you're welcome. It was great. It's fun having, it's one of my highlights of the year, having our recent graduates here. I told them in an email we were just killing time until we get to go to Kelly's later on, but that was just a joke. So it was very informative, and I hope you help some of the students out there. Talk to them when it's done. If you didn't want to ask a question while they were up here, ask them a question later. They'll be hanging around. So you guys are free to get out of here. Though those chairs look comfortable. So that brings us to the highlight of the night, at least a highlight for me. We always have a cool keynote speaker at this. Every year we've had a high level, actually the CEO of some firm, most of them fairly big public firms, that comes to our kind of little event. I mean, we're not a huge program, so we always end up with 60 or 70 or 80 people here. And we end up with these amazing people to come speak. One of the neat things about tonight is, for kind of a switch up, we have somebody from the residential side, and to me the residential side is hugely important for the economy right now and going forward. So Richard Smith has really nicely agreed to come speak to you guys. Just a couple of things I read about. Richard's company is called Realogy. Realogy is any home you see for sale and has a sign in the front yard, that's Realogy. They're called a bunch of different things, but you can go look it up. It's pretty much, they sell every house apparently in the country right now and do a lot of other things. They're a very integrated company on the residential side. So Richard has been named, among other things, the most powerful person in residential brokerage, which is kind of scary. What else did Power 30 by Smart Money, 50 most powerful people in real estate by Business Week. So this isn't a small guy. His company is a several billion-dollar company, had a huge IPO in 2012. So he can probably tell us all kinds of things about going from a private to a public company. That would be a lot of fun. One of the things that really interested me when I started looking in is he also runs one of the most ethical companies in the world. They've been named that by a couple of different places. And given our focus on ethics at Villanova, hopefully he's going to say something about that. He's also involved in important policy discussions around housing right now, which there are many. We have a recovering, I guess, slowly recovering, you can say better than I can, housing market, but there's still a lot of issues around affordable housing and around how we make sure good borrowers can get credit to buy houses. So we have some broken parts of our housing market still, and he's certainly at the forefront of that area with policy institutes like at Harvard and also down in DC. He's been a part of some important commissions. So welcome very much, Rich. And he's also a Villanova parent, so he was smart enough to send his daughter to visit us let us have her for 4 years at Villanova. So I want to introduce Richard Smith from Realogy and thank him very much for coming. So Richard Smith, everybody.
All right, good evening, everyone. So a couple rules to think about. When we get to Q&A, and I'm not going to let you off as easily as the last panel because I want a very robust question and answer session. But when you come forward with your very interesting questions, please come to the mic so we can all hear your wisdom. So Realogy is a New York Stock Exchange company. We trade under the symbol RLGY. I'm sure those of you who came prepared did all your homework on the company and what we represent. We're about 26% U.S. market share. 1 out of every 4 homes bought or sold by a broker is handled by one of our brands. So you'll know our brands. You won't know the holding company. And we really don't care if you know the holding company, but we want you to know the brands. So Coldwell Banker, both on the residential side and commercial side. Coldwell Banker Commercial is one of our companies. ERA, Century 21, Sotheby's International Realty, and Better Homes and Gardens. Now, we're a franchisor of residential real estate companies, and we're an owner-operator. So we're the largest owner-operator. We're the largest franchisor worldwide. We operate in all 50 states and about 103 countries. We deliver services to 160 countries through one of our business units called Cardis, which is an employee relocation company that essentially moves employees from any of the firms that we just mentioned. If they move an employee from one location to another, typically they do that through an outsourced service provider. That's us. So we manage real estate transactions in about 160 different countries on behalf of about 60% of the Fortune 50. So this is a business we know quite well. Many of our brands go back 100 or more years. Coldwell Banker is 106 years old. Sotheby's Realty, the Sotheby's brand is 275 years of age. So we generally know the topic of residential real estate. To a lesser degree, through Coldwell Banker Commercial, we're a commercial player as well. So that tells you a little bit about what we are today. We're about a $10 billion enterprise value company. For those of you who know what enterprise value means, that's debt and equity. Less cash. So that's essentially what you'd have to pay if you tried to buy the company. And by the way, any public companies for sale every day, either through you or through someone else. So always remember that. That's where we are today. But let's back up a little bit and tell a story, because it's far more interesting to tell the story. HFS was called the firm in New York City called Hospitality Franchise Systems. In 1990, 1991, we became very intrigued by the demographics. We loved the travel demographics. We subsequently learned that we loved the real estate demographics as well. But travel was fascinating to us, so we started buying hotel companies. In short order, we amassed the largest hotel company in the United States, and HFS became Sendant, a large conglomerate. We were the largest in travel. We owned Avis, we owned Budget, a number of different rental car companies. We owned Orbitz. If it was travel, generally we owned it. In about 2006, we decided that we would split the company. Now, between the development of the company in 91, 92, and 2006, we also were intrigued by real estate. In 1995, we acquired our first real estate company, Century 21, and while no one was paying attention, because real estate was very much out of favor during that period of time, we started acquiring brands people were not paying attention to. No one, at least in the residential real estate, had ever amassed and operated multiple brands under one umbrella, so we were the first. We were the first to do it on the hotel side. We were the first to do it on the residential real estate side, and we did it quite well. In 2006, we decided we'd become large enough. We split the company in three pieces. So the hotel company became Wyndham Worldwide, which is a New Jersey-based travel company. Avis Budget became Car. If you remember the Zipcar, anybody from New York City, so you know Zipcar. Well, Avis recently acquired Zipcar. So that's a publicly traded company. And then our company, Realogy. 2006, we were public about 9 months before we were acquired by Apollo. We've known Apollo quite well. We've entered into a number of joint ventures with them going back to 1995, 1996, so we knew them well. They liked real estate as well as we did. When the company became available, they promptly acquired the company. Now, it was a leveraged buyout, so we levered up the company quite well. And at the time, it was very appropriate. And we knew that there was a downturn on the horizon in housing. We just didn't know it was going to be as bad as it turned out to be. So we went into that downturn about 12 times levered. So if you know what that means, our EBITDA got at its lowest point to $585 million ballpark. Our debt service was $650 million a year. So as the housing market continued to get worse after 2006, Apollo essentially wiped out its equity. We had a number of options available to us. We could restructure through the courts, because clearly with a 585 in EBITDA, that's not cash, by the way. The 650 debt service was cash, so something had to go. We convinced most of the bondholders, the more relevant bondholders, to double down. So they were effective in acquiring debt the second go around, 9, 10, 11, 12, 20 cents on the dollar. But that afforded us the opportunity to wait until the market recovered. So in during that period of time, from 2006 to 2010, we essentially restructured the company outside of the courts. And someone in this room along the way will learn what that's all about. Any lawyers in the room? Anybody in law school? well, you will be, somebody in this room will go to law school, and someone in this room is going to end up being a restructuring lawyer, because it's an important part of what we just went through. May not be relevant in the days to come, but it was critical that you were skilled in restructuring debt, both in the courts and outside the courts. So we had to convince debt holders to subordinate in many instances, and to literally double down, in some cases even more than that, to acquire the debt of the company, on the assurance that we were doing everything we could possibly do to maintain this company through those very difficult times. Now, it was an unprecedented correction in housing. It affected multifamily, affected commercial, affected everybody, affected the U.S. economy. Continues to do that today. But we knew it would pass eventually. So we had to convince all those very interested parties who had substantial vested interest in our company to wait. Let us do what we had to do to keep the company going. So during that period of time, we laid off 30% of the staff. We went from 15,000 employees to about 10,008 and change. We cut $500 million in overhead, about 85% of which will stick in a recovery. So when you look at the leverage and the operating leverage, that was then, continues to be quite impressive. Because we did everything that would have been done through a court filing, it was satisfactory, if not more so, to all of our bondholders. In 2010, we started seeing the very early indications that the market was starting to turn. Now, we have a view into the market that is generally a little better than anyone else's view, both on the residential side and to a lesser degree on the commercial side. So we started seeing the slightest indication in 2010 that a housing recovery was in the making. As we got deeper into the year, we were always reminding ourselves, not quite as sure as we were earlier in the year, but we slowly started seeing those green shoots. When we got into 2011, it pulled back a little bit. We were not as sure. We got into the second and third quarter. We were a bit more confident that perhaps it was on the horizon. When we got into 12, we were highly confident. On October 11th, 2012, we took the company public. That was the first trading day. It was the second largest IPO behind Facebook. It was about $1.2 billion. It was substantially oversold, and that began our new career as a new public company. Now, what was important about that, we reduced our leverage rather substantially in that IPO, because we had debt holders who, at our option, had to convert to equity. Almost the entire proceeds of the $1.2 billion stock offering went to debt retirement. Today, we're at about 4.6 times leverage, about $5.2 billion in revenue and growing, and we are, again, in the early stages of a housing recovery. So it tells you a little bit about the company and how we got to where we are today. The $500 million, by the way, in overhead that we cut will stick. By all indications, about 85% of that will stick through a recovery, and it appears to be permanent. So that speaks to some of the upside in the stock. We recognized early in the process that we had to make tough decisions that were very difficult, and they had to be decisions that were going to be made that were in the best interest of the company long term. Throughout this entire process, one of the mandates that was so important to us is to at all times be ethical in all aspects of our business, which we continue to adhere to today. It's cultural in our company. It's critical. It's how we operate. We don't always make decisions that are easy. We make tough decisions, but we do them to ensure that we are maintaining that high regard for business ethics. Ethisphere Institute, which is one of the great business ethics think tanks in the world, recognized us for the third time, which is not without precedent, but it is a bit unusual, as one of the world's most ethical companies. About 144 worldwide were selected, and we were fortunate to be one of those. Now, we don't do it for that recognition. We do it because we do everything possible to ensure that our name is not on the front page of the Wall Street Journal for the wrong reasons. We have a fundamental in our company, and it's something you should take to heart personally. If you can't explain it to your mom, it's probably not a good idea, especially if she's not going to agree with you. And you don't want that coverage on the front page of any journal, Wall Street or otherwise. So remember that in all aspects of your business conduct, and it makes for a much easier business career. So where are we today? We're very deeply entrenched in policy. We spend a lot of time in Washington, D.C. If you get any CEO up here of any company of any size, they're going to tell you that in a very important part of what they do every day, he or she will tell you, they must spend time in Washington, D.C. on policy issues. We're burdened with enormous regulation and a number of other issues that weigh heavily on the housing recovery. So we spend a lot of time trying to argue our point, which means lobbying to our elected officials and also to the administration. And that's an important aspect of what we do, and it's going to be an important aspect of what you do in your careers. You have to be able to articulate the position, not so much that it personally benefits you or it benefits your company, but it benefits from a policy perspective, and we approach it that way. So although we often lobby for issues that eventually are going to help our competition, it also helps us. So we spend a lot of time on policy. It's a fascinating part of what we do for a living. It's a fascinating part of what you will be doing at some point in your career. Someone who mentioned that it's critically important to ensure that you have strong interpersonal communication skills. It's absolutely essential in business. It's critically important if you get to the point where you're representing your firm on policy-related issues. So unfortunately, we spend a lot of time in D.C. on matters that pertain to housing and the housing recovery. So let's talk about that. So residential real estate is about a $1 trillion sales volume market. It's about 15% of the gross domestic product currently. Historically, it's been as high as 18 and change, depending on who you're listening to. Some will tell you as high as 20. That's right now about 15%. About 90% of that's existing home inventory sales and 10% new construction. They're both essential. It never really moves much. New construction will pick up a little bit, so it'll pick up a point or two. Existing homes will move up or down, but essentially that's the relationship. It's about 90-10. They're both important to a housing recovery. They're both important to a broader economic recovery. Historically, housing will lead you into a downturn. Housing will pull you out of it. It is not pulling us out of this downturn. There are a variety of reasons for that. We can all speculate as to what they might be, whether it's economic policy, the sign of the times, the length of the depth of the trough, the length of the trough. We can all debate what's contributing to this, but the simple fact is housing is doing everything it possibly can to pull out of this, but it's difficult. I recently op-ed a piece that showed up in the American Banker about the FHA and the important part that the role that FHA plays in the typical housing recovery. And this is just another classic example of an overburdened regulatory environment. So FHA is, as you know, the aspect of the U.S. government essentially responsible for helping people buy their first homes. Many people in this room may at some point get an FHA loan. You can have as little as a 3.5% down payment. Now, it takes a lot of work to find 3.5% of that purchase price in the form of a down payment, be it a letter, a gift letter from your parents, or some interested party, or just saving that amount of money. But in addition to that, you're going to have to come up with 3 points to close that loan. Almost 2 of that is going to have to be in cash at closing. The balance can be financed. There's no reason for that at all, none whatsoever. It should not be that high. It's weighing heavily on the recovery. The first-time buyer generally represents 40% of all transactions. Today, they represent 28%. That gap is having the expected impact on the housing recovery. Monday, I was in Washington, D.C. I'm a commissioner on the Bipartisan Policy Center's Housing Commission. It's truly bipartisan. We have Democrats and Republicans who get together in a room and argue the issues and develop policies. This is principally over GSE reform. If you're not familiar with that, that's Fannie and Freddie and the ultimate change that's necessary to revitalize Fannie and Freddie and minimize the impact and exposure on the U.S. taxpayer. Now, what's important about that is that FHA is responsible for ensuring that that segment of the U.S. population continues to be a viable, healthy part of housing. They're not right now. And in spite of our efforts to convince the government that they need to back off on the fees, from a policy perspective, they're still reluctant to do that. That is probably keeping us in the 3rd inning of the recovery. Now, if you think in terms of baseball, This is a 9-inning game. It probably will go into overtime in all likelihood. We're in the 3rd inning. We could be moving much faster if not for this very difficult regulatory environment. But we're making progress. So year over year, we expect next year to be slightly better than this year. It should be much stronger. It's not for the reasons I just articulated and a number of other reasons, but we are recovering. Multifamily is starting to slow, and for those of you who are very involved in the institutional purchases of single-family homes, the multifamily environment has been extraordinarily robust for the past several years. We're seeing that start to slow, and that's slowing principally because they can no longer get the 5 to 7% annual rent increases that they were enjoying over the past several years, and that market will start to slow. The institutional investors who have been very interested in the asset class that's been created during this downturn, single-family homes, is starting to pull back a little bit. If you're familiar with that as a business, we could argue whether it's a trade or a business, but many of the large institutions jumped into the single-family home market. They were buying assets at deeply discounted prices. That made that a particularly interesting trade. I'm not so sure it makes it a particularly interesting business, but it's a very interesting trade. So a lot of the institutional, Blackstone and a number of other private equity firms created funds to go after that sort of undervalued asset class. They've done incredibly well on the appreciation of that asset class, but now they actually have to manage it, and that's the difficulty. The management of that is very difficult. We're in the business. We have been for some time. We'll see if they can replace the inventory once they start selling it to recognize the appreciation of that asset class. And we'll see if the returns on managing those assets are as interesting to them as they were when they had the upside and the appreciated value of the otherwise undervalued asset. That helped enormously because it put a lot of inventory back in the market that was needed repair, needed some tender loving care. They put a lot of capital back in the market. We now have inventory that will come back into the market at some point for people like you and me to buy as first-time buyers. There are a number of other issues that are keeping the housing recovery a little slower than we'd like to see. Most of it's regulatory, but it is in all instances the macroeconomic environment. It's not as strong. We don't have job growth is not as strong as it should be or could be, and that is weighing heavily on most markets. Now, in a recovery, housing reacts a little differently than it does in a downturn. In a downturn, you paint all markets with the same brush. They're all negative. Virtually every market, whether it was commercial or residential, was under a lot of pressure because you're following those macroeconomic trends. In a recovery, the exact opposite recurs. In a recovery, you regress to the norm. The norm depends on local population growth, income growth, all those things that drive residential real estate values. We see that happening now. We're still about 20% below the peak, so national pricing peaked at about August 2006. Currently, on a national basis, we're still about 20% behind that, so we still have room to go. From a unit perspective, we're still trailing the peak by a significant factor. That'll continue to be the case for the next several years, but at some point, we'll get back to that peak, which is about 7 million existing home sales and probably about another million and a half in new construction. I don't know when that will occur. It will occur. I'm just not sure when. It will occur when we have a much stronger macroeconomic recovery and much stronger job growth. We're pretty comfortable with where we are now. We grow by selling franchises and acquiring companies. We have a very active M&A function within our company. We generally close about one deal a month. We recently acquired a company called Realogy, which was a technology-based real estate company out of California. We closed that about 2 weeks ago, principally for their technology and the broader application to our real estate brand. So it's a very active M&A environment, principally because of the undervalued asset. Now, we buy these companies at about 6 times EBITDA. For any of you who have modeled deals like that, it's about 6 times EBITDA. We generally have to help them build the EBITDA model because they're not really sure what that means, but we get them there eventually, and we pay 6 times. We deliver about two turns in synergy, so we're in the deal at about 4 times EBITDA generally, and those are pretty attractive, and that's the market. We're the market maker. There are very few other people acquiring companies. We have a very aggressive pipeline. For those of you who are interested in that, we also have interns in our M&A department. who some have ended up as full-time employees. It's pretty interesting perspective because it's all residential, but some of it, you'll go from a small residential deal to a larger $200 million deal just because you're in the M&A department. If you're good at what you do, you're gonna be a utility hitter, and we're gonna put you where we need you. So it's a fascinating time in residential real estate. It's fascinating for commercial for a variety of different reasons. It's a great asset class. It's undervalued. I think the returns are particularly attractive for a variety of different reasons, both residential and commercial. I heard the discussion about you create wealth by being an owner. The barriers to entry to residential brokerage are fairly small. You don't have to take a lot. It doesn't take a lot of capital to start a residential brokerage firm. Anybody with a family member in residential? Okay, right. Well, I know my daughter, of course, me, but it's a fascinating business. You can grow it rather rapidly. It's principally driven by technology today, not so several years ago, but it is now. It represents a significant opportunity for you to create value that you wouldn't create otherwise. Now, I speak to that both on the commercial side and the residential side. So where we are today, we're pretty comfortable in the recovery. We think it's slowly happening. We'd like to see it much faster. I think in time we'll all be pleased with the outcome. I don't see much happening before the midterm elections. I see even less of substance happening between the midterm elections and the presidential election of 16. But we're pretty optimistic that post-16 we'll see a different residential housing market. We'll probably see a different commercial market for a variety of reasons, principally a less difficult regulatory environment. Now, I'm going to be quiet for just a moment, but I want to talk to you about something I was asked to speak to, and that was, how did I get here? And how does that apply to you? So for those of you who are sitting in the audience believing that whatever degree or whatever your major, how many finance majors do we have? To virtually everybody. So anything else? Liberal arts, history, anything? All right. Well, my major was criminal justice. My minor was political science. I was going to be a prosecutor. I had no idea where I was going to go, and I had no idea whatsoever I would be in this job. I'm the most unlikely person you can imagine who could be in this position. And all the accolades that were just given to me a few moments ago were a product of not my education, but my experiences. And that was a point that was made by one of the panelists. You will get out of your career whatever you put into it. So from my perspective, this doesn't come easily, and it won't for you either. It's going to be a very difficult challenge. Whatever path you take, nothing is going to come easily to you. It's going to require long hours, hard work, skill, dedication, a commitment to excellence that you're probably not even thinking about now, a commitment to values that you hear about, you understand, you think you know what they mean, you don't. You're going to learn them. You will be faced with a multitude of opportunities to lose sight of your ethical values. Don't. It's a mistake. There's no return on that investment. So guide yourself with that in mind, and whatever you decide to do is going to come your way. Life's a matter of choices. Remember, you choose to be successful, in all likelihood you will be. If you choose not to be, in all likelihood you won't be. What's the old saying? If you think you can and you think you can't, you're right. It's been a critical part of our success. It will be a critical part of your success if you think that way. But you've got to make a commitment to it, and you cannot step sideways on that ethical issue. It's critical to your success. So I'll conclude my comments with that. But I want you to read a book. Now, I'm not, maybe some of the professors in the room will object to this, but I'm going to encourage you to read it anyway. Has anyone ever read the book Never Eat Alone? Keith Ferrazzi? All right. So for those of you who want to figure out how to make things happen and how to create opportunities where they don't exist, how to open doors, you have to read this book. So again, it's Never Eat Alone, Keith Ferrazzi. Essentially, it's going to tell you that throughout your professional career, one of your most important characteristics will be your ability to capitalize on your relationships. You have to build them. You have to continue to mature those relationships, and you will eventually be in a position to take advantage of those relationships. And it's a two-way street. But read the book. It'll help you advance in your career, both at school and when you get out of school, in ways that you're not even thinking about. And if I leave you with any advice, that's probably one of the most important things I can leave you with. Read that book and take it to heart. So I'm going to shut up for a few minutes and go to Q&A. Now, I do this all the time. And what I love is not the comments. I didn't read anything. I know all this by heart. I don't need a teleprompter because I actually know the material. But the Q&A is what's most fascinating. So what I hope we can do now for the next few minutes is go right to Q&A, and I want you to be bold and stand up and ask a really tough question. Yes, sir.
You touched on the U.S. market and how heavily regulated it is. And I was wondering, being a global company, could you maybe go into some of the challenges there and any stories or anything like that?
Sure. So it's a great question. We have in this country a law called the Real Estate Settlement Procedures Act, RESPA, which dates back to 1974, which essentially requires that a consumer at a closing table cannot be unduly influenced by any party and cannot be in any way incentivized to direct business in from one lender, as an example, to another. Just in real simple terms, you as a mortgage broker couldn't provide incentives to the agent to direct the consumer to go to one mortgage company or another. That's illegal. It doesn't exist anywhere else in the world. I'm not suggesting it should exist here either, but that is an example of the regulation, which is, bear in mind, it's a 1974 law. So here's the theory. The theory is you, the consumer, are too stupid to realize that there are more than one mortgage company, that there are a multitude of opportunities, and that you somehow have been denied the education of a multitude of operators, in this case mortgage lenders. But that's not true today. I mean, we can all go on the web, and we can go on our mobile devices right now, hit real estate mortgage rates, and get literally millions of hits. So it's obsolete regulation, and it needs to be reformed. It's not. Fannie and Freddie. Many believe that Fannie and Freddie fundamentally created the environment we're in today. Now, we could argue both sides of that, but fundamentally, those are old structures within the U.S. government that should have been addressed years ago. There were safeguards that could have been built in years ago, but good old-fashioned politics weighed heavily on common sense, and we didn't get the common sense side. We got bad policy, and that continues to be the case. I mean, here we are after 2008. Still, nothing has happened to Fannie and Freddie. It's been, in spite of people like us, the BPC we published a white paper that's truly bipartisan. Just as many Democrats have worked on this as Republicans. In fact, the mix is 8 and 8. And we developed a bipartisan approach, which has actually become 2 bills in the U.S. Senate. So our recommendation served as the framework for 2 bills. Nothing. The partisanship is unbelievable. So the regulatory environment's even worse. And I don't see it getting any better in the near term. But we can always hope. Yes, sir.
What's your opinion on companies like Zillow and Trulia? Just wanted to hear your
Great
thoughts.
question. So Trulia, we're their largest client. So we intimately know what they do and why and how. So Zillow and Trulia are a media channel. And the combined entity, as you know, Zillow is acquiring Trulia, subject to the FTC review, which is pending. And I think probably at the end of the day, the deal will probably be approved. So historically, in residential and commercial real estate, there's a sort of hard copy print approach to marketing. It's extremely inefficient. There's no return on that investment. You can't quantify the investment. And it's moved quite well and very efficiently to online. So Trulia and Zillow build themselves as a media channel. They're growing as a media channel, and we think they'll stay as a media channels. Now, there have been many examples of Trulia and Zillow in the past. So Microsoft in 1974, Paul Allen said he would put all real estate brokers, commercial and residential, out of business. That failed. It was followed by AOL, Yahoo, Microsoft, a variety of Home Store, which is now Realtor.com, a variety of come and gone. The theory being that they'll somehow capture the consumer, control the consumer, and then control brokerage. It doesn't happen for a variety of different reasons. There are multiple listing services in this country that are Nonprofits, there are about 800 of them. They actually control the inventory. And Zillow and Trulia depend on the inventory provided by the broker to build their business. So it's a good business model. It works well. There are thousands and thousands of websites doing exactly what they are doing today, but they're the most efficient, and we think they're the most effective. So our view, and we get this question often from investors, as you can imagine, the reply is always, to the extent they continue to provide the efficiency that we see today, and they continue to provide leads that result in closings, they'll be a great partner of ours. If that ceases to be the case, we'll have a different view. But right now they're doing a great job, and we wish them well. Very timely question, though, especially given the FTC review. Yes, sir.
With quantitative easing winding down and interest rates expected to rise in the next year from now, where do you think the markets will be in a year from today?
Right. So Freddie Mac and Fannie Mae have great economists on this very issue. So a 100 basis point increase in rates takes about a year for the market to absorb. So let's say the rates went from 4.25 today. I think when I left the shop, they were about 4.3. So let's say there's a dramatic increase of 100 basis points between now and when we all go home tomorrow. It's going to take about a year for the market to accept that. But remember, rates move based on the general macroeconomics. So if the economy can handle it, in theory, the rate movement shouldn't be a shock. Now, it will be a temporary shock, but then the market will absorb it, and then it will pick up where it left off. So you'll see housing flatline. It'll accept the 100 basis point movement, and if there's not another 100 basis point movement, which should be unlikely, then the market starts to react to that favorably because it settles in. Now, what happens before the rate shock is the market will spike because people who are sitting on the fence will say, I don't like where this is going. I thought I was going to get lower rates. I'm going to get higher rates. I buy now, lock in the rate, and then, so you'll see a spike in housing, then it'll flatline. About a year from now, it will pick back up. So listen, rates are going up, and they should. And I'm a proponent of getting back to what drives the U.S. economy, not the Fed. I'd like to get back to the fundamentals, but that's going to take a little while. So I don't see, our model doesn't suggest a 100 basis point increase in residential rates, but we do see an increase. And so does the National Association of Realtors. Fannie and Freddie both see rate increases sometime in 2015. I doubt it before the midterms for a lot of reasons, but probably post-midterm you'll see some movement in rate. The 30-year fixed. What's interesting about the 30-year fixed, and as the rates move up, remember this is always remember this because you'll see this on the commercial side and the residential side. But it'll be the gap so if people are sitting on the sidelines, generally ARMs will step in and fill that gap. But the ARM underwriting requirements under Dodd-Frank are very difficult today. So the old days of giving you a teaser rate are gone. Dodd-Frank, the regulatory environment they were just discussing, and I should have mentioned this, under Dodd-Frank, is anybody familiar with Dodd-Frank? You should be. If you haven't read it, you should. So under Dodd-Frank, there are provisions under Dodd-Frank that require certain regulations that make it easier for a lender to lend without the putback risk. Let me give an example of that. So if I originate a loan for you, and in the process of doing that, I literally leave a page out of the document, or I fail to complete the page. 5-10 years down the road, if you default on that loan's coming back to me as the originator under Dodd-Frank. Now, there are provisions and definitions that are pending that once made, then I now have the assurance that that's not going to be the case. If I originated that loan in good faith, if I failed to do something that was not material to the loan, then the loan's not coming back to me. But right now, lenders are lending with that in mind. A lender now says, I'm going to put so many credit overlays over that loan that if I screw up, I've protected myself because I have credit overlays that the government hasn't even considered. So if you peel it back, I'm still okay. And that's what's happening today. That's why the market's not as robust as it would be otherwise. So I think that's another piece of legislation that is 2 years past due. This definition of the putback risk should have been determined 2 years ago. It's still pending. Literally, you can't get parties together, the regulators, to agree on what the new regulation is going to look like. But the point being that ARMs are very much subject to that. So it's difficult to originate an adjustable rate mortgage, residential anyway, because of the uncertainty and the pending regulations. You can't ask a question, so.
So you were a political science, criminal justice major. What kind of advice do you have for majors for us if we want to end up in a position of where you are now?
Okay, so that's a great question. Here's what so I would say, I didn't tell the whole story. Who's working their way through school? Who has, I assume the rest of us have college debt. Nobody in this room is working their way through school. Well, I worked my way, I couldn't afford to go to school. I did, but I had to work my way through. So I was a police officer. I was not a university police officer, I was a city cop. And when I left, I was their youngest ever robbery homicide detective, right about the time I got out of graduate school. And then I was going to law school, but I accepted an internship with a hotel company in Atlanta called Days Inns of America. It's a small budget hotel chain, and I went into their management training program. And the question's important because you will learn this too. For about your first job, your second job, your major is going to be, and depending on whether you stay in financial services or not, your major is going to be critically important. So the point that was made about if you're going to end up in one of the PE firms, and by the way, I worked with them, Apollo, and we all probably know Apollo. I worked with them incredibly well for a long time. You are going to be the best of the best from the MBA crop, or you're not going to make it. You're not going to be a criminal justice major. You're not going to be a political science major. You're going to be a finance major or an economics major, period. That said, a couple years into this, that becomes less relevant. What becomes more relevant is the jobs you've held and the experience you have. So if you excel, work very hard at any assignment and all assignments, you'll get the next opportunity. There's an old saying, if you do the most menial job exceptionally well, you'll get the opportunity to do the more difficult jobs. But you've got to do that first job really, really well. So that's all I did. I accepted anything that was thrown my way, and often it was jobs no one wanted. I mean, I went the route of, I was director of personnel. We had some insurance classes, I assume. So I was a risk manager. I ran the risk management operations for a hotel company, which was an interesting challenge. I've been on the operating side, the administration side. I've managed funds within a company. I've managed just a little bit of everything. But the key is I accepted whatever the assignment was. And you're going to need to do the same thing. You're going to need to make sure your eyes are open and you're willing to accept any task you're asked to perform. And then eventually you start getting those service stripes on your sleeve. And the assumption is if you could do all that well, you can do just about anything well. Now, it may or may not be the case, and it may or may not, some could argue it hasn't been the case with me either, but at least that's how I got to where I am today. And at some point, it didn't matter what my major was and what my background was. What mattered is my job experience. And you're going to work very long hours. So I know that's difficult, but you're going to work 80 hours or more a week. That's a normal week. And you're going to travel a lot. And you're going to pay your dues, and the dividends are enormous. And I think, enjoy the ride while you can. It's a lot of fun. Just don't lose sight of this. That don't take yourself too seriously or what you do too seriously. Enjoy what you're doing. It's a lot of fun out there. It's a wealth of opportunity. We're coming out of the worst trough in the history of residential housing and arguably commercial, and there's just enormous opportunity. You got to be out there and take advantage of it. So get in, get your feet wet, work hard, keep those ethics high, never lose sight of the importance of that, and you'll do quite well. This is a great university with a great following, and the Villanova graduates here, there, and everywhere will bend over backwards to help you. You just have to raise your hand and ask. Now, before I go, I want to ask a question. So I'll give you an interesting little story. Everybody talks about the millennials and whether they're going to be homeowners or not and why. And so we bypassed you guys. We went right to the Generation Z, which is, if you haven't heard of that, it's age 13 to 17. So we went to these 13 to 17-year-olds in one of our brands. So they hired a marketing and research firm, and they got all these people together, they're 13 to 17 years of age, and said, all right, so what do you think of housing? I'll give you some interesting data points. So again, 13 to 17, you got to keep that in perspective. So 96% said the most important thing for me to do is own my own home. Now, I thought that was remarkable. So then we went a little beyond that. If that is the case, and if you could actually define what was your most important home and what it looked like and where, what would you do to actually get that home? So they said 76 to about 80% said they would give up social media for a year, which I found was absolutely amazing. But here's the one that really told the story. They would invite their mother or father or both to their prom. And that was as high as 80%. So if you guys have lost sight of the importance of housing, they haven't. And I'm confident you haven't either. I'm going to ask for a show of hands. So whether you can afford it or not is not the issue. Who has a goal within 5 years of being a homeowner? Yeah, it's generally about 70 to 80%. And as you get a little older and then you get married, that number goes up to about 95%. Now, here's what's interesting. According to Freddie Mac, 10% of the U.S. population will never own. So 10% will always be a renter. Now, it's an interesting topic because very little research has been done by anyone on this subject, but it's fascinating if you think about it. So 90% of the U.S. population will eventually be a homeowner. The commercial needs and the residential needs that follow that thought are mind-boggling. So you're in the right industry, the right segment, you've got the right educational background. Take advantage of the opportunities. Make sure you read that book, Keith Ferrazzi, Never Eat Alone, because then you'll learn how important it is to make sure you know people like me and other CEOs who have been up here, because that's going to be the door that will be open to you. So take advantage of it. Don't be shy. For those of you who didn't want to stand up and ask the question, my email address is richard.smith@realogy.com. Now, it's not Realogy, it's biology, Realogy. Realogy.com. Send me an email. I respond to all my emails personally, and I'm happy to help. If I can ever help you in your career pursuits, don't be shy. Pick up the phone or send me an email, and I'll reply to you. I appreciate your patience. Thank you for having me. God bless you.